of you to join us for the technical session titled Digital Finance Journey for the Underserved, Harnessing the New Disruption in Indian Microfinance. The Indian microfinance sector, an essential component of financial inclusion, is experiencing a significant transformative change driven by digital disruption. Traditionally dependent on physical field operations and high-touch models, the sector is now undergoing a paradigm shift. Fintech, digital payment platforms, and mobile banking are redefining access to finance and financial services for underserved populations. This technical session, hosted in partnership with Annapurna Finance, aims to explore the evolving digital finance landscape with Indian microfinance, the current status of digital adoption, key challenges, and the future outlook for deeper and more sustainable inclusion. It is my proud privilege to invite the esteemed panel for the session. The session shall be moderated by Dibya Jyoti Patnaik, Director, Annapurna Finance. May I have a big round of applause for our speakers? The panelists for this session are Abhishek Agarwal, Managing Partner, Action Impact Management; Amit Tyagi, Head, Fintech, Biller Relationships, Product Growth and Developer, Ecosystem Relationship, National Payments Corporation of India; Aman Dalal, Head, Transaction Banking, IDFC First Bank. May I also request that during the panel discussion, as we proceed towards the end, you will see a QR code. Please feel free to scan the QR code to provide your feedback and submit any questions that you may have for the panelists during the session. We look forward to an insightful discussion. With this, I would like to hand over the charge of the session to Dibya Jyoti. Over to you, Dibya Jyoti. Thank you so much.
Thank you, the management of Access Assist, for allowing us to co-host this panel. And thank you, Abhishek, Amit, and Aman, for taking the request of joining this panel. We couldn't have asked for a better panel than you guys. And we're running late, so I want to run fast. So the idea of setting up this panel is to understand the evolving market, the evolving need of the clients and the institutions, and how are we, as supporting institutions, are looking at this, these evolving situations to see whether we can, in the right path, what else is needed to be done. There are a lot of things happening in the digital space. Are everything going to fit us, or there are any customization needed to our section? So, just to set the context, and then I'll go and ask you guys, what you guys are thinking about this particular thing. So let me set the context. The whole GDP growth potential from digital finance across the world is close to 3.7 trillion USD. And if you see that the graph that we are showing here in the left side, you could see that the most beneficial countries are the low income and middle income countries of the digitization process. You would see the upper bar, which is the high income countries, and the yellow bar is the low income countries, and the global average, if you see. And this is post the whole digital transformation which is happening. And it is across, like, from the sub-Saharan Africa to Southeast Asia, digital payment revolution, to LATAM's payment leaders and emerging credit access. So people are experimenting a lot of things. In India, we do this UPI, JAM, Trinity, mobile banking in Philippines and Vietnam, and M-Pesa and mobile money in Africa and sub-Saharan Africa. And also, little bit more evidence how the things have moved post the digitization processes have started and how it has gone very fast. If you looked at the 2011 numbers of the account ownership, active account users, formal savings, digital credit access, micro insurance, emerging funds, and income stability perceptions have significantly moved in the direction of, in a positive direction, from 25 to 75%, from 45 to 68%, from 8 to 40%, from 15 to 38%. It's a massive, massive move from where we started and where we are. So the demographic dividends based on age, gender, income, and geography is clearly visible. Plus the quality gap is also slowly reducing as we know we are moving more on the digital front. So that's looking at that strength. We are now back to our sector, the whole microfinance sector, how it has evolved over a period of time. When we started the whole microfinance journey in India, it was a high touch, high dependence on the field force and cash heavy, paper based activity as a model, as an MFI model. Then from 2010 to 15, that's the early digitization phase, we call it, where the processes have started getting digitized. Uses of SMS and eKYC pilots were started. And the whole disbursement have also started in the bank account, because the jam was already there, the jam trinity was already there. And from 15 to 20, there's a mobile first model which was evolved, where we have introduced mobile money, application for payment, early uses of basic AI, scoring and underwriting model. And 20 to 25 is a massive shift in terms of the opening of banking and API based operation, where banks are now started moving their platform to institutions like us to take the benefit of all the design and development in the digital space that they have done. Then the fluidity of the fund and the real-time data monitoring, all that has started. So this is largely the journey of the industry so far. Again, 25% of MFIs in the emergency market are using advanced technology covering AI scoring, real-time analytics, and embedded finance. The front ends have changed from, now it's biometric eKYC, automated loan disbursement, digital payment, app-based loan applications, customer engagement through SMS and low literacy users, WhatsApp and IVR. So that has also changed. Processing has almost changed for almost all the institutions. They're all gone automated, predictive analysis of risk management, AI and machine learning based underwriting, alternate data source scorings are already in place, and and they have all evolved over a period of last 5 years also. So the models are also maturing, in a more meaningful way. Automated compliance reporting as we go on, getting more and more compliance heavy. That's also is happening. And from the infrastructure also, it's a very supportive infrastructure, cloud-based core banking, predictive analytics of risk management frameworks, API integration with payment systems, banks, cybersecurity frameworks, and customer relationship frameworks. So while these are the possibilities, we are also in the process of moving our processes. The technological integration barriers have there. Then the skill and talent gap is there, which is creating a little bit of problem. The regulatory and compliance barrier are there. We're still struggling on the KYC front, negotiating with the government and regulators. Cost of digitization, there's a huge cost to this whole platform that are there. There's a cost involved in per transaction cost. There are so many other costs which are involved. So how that is happening, and then will this move to become a mission trade, because it's being on a high touch, high tech model, where you are reaching out to people every day, you are trying to understand them, there's a human connect, and now slowly some of those processes or large part of the processes are getting replaced with the technology. There's no front end. People are there. People have started using bots. People have started using a lot of other technology, which is no human intervention is there. So that's a challenge. Um, and again, like the MFIs have seen 175% faster growth post digitization, reaching the last mile. So here we are trying to build a case for the microfinance institution to go digital because that helps the organizations in the long run. They can reach out much faster. In Indian, the microfinance portfolio expanded 30x. The client base increases 4x post the digitization process. A loan origination time have moved from 15 days to 3 days. A turnaround time have moved from 7 to 14 days to 1 to 2 days. Repayment processes are same day, it's just a click away. So the processes have improved significantly, in terms of how the whole processes are there. And again, the gender divide in rural India is closing gradually as, the digitization. I think the best part of the digital penetration is, we are in a position to move a lot of these barriers which are available to this segment that we serve, particularly the women at the bottom of the pyramid. And and also you can see that 55% of the PMJDY accounts are held by women that are our primary borrowers. There's a huge untapped potential. Now, after doing all this, what is the next step? There's a lot of potential. World Bank projects the digital financial inclusion can add hundreds and millions of new users globally. Low-cost digital savings, tap and pay, UPI, account aggregator model, telematic processes. The accessibility will, it's on a fingertip. You don't have to access to go to a bank. There's no need of physical bank. The cost will go down substantially for to serve a client of this segment. Then the awareness beyond physical touch, the IVR, the vernacular model, learning platforms, interactive customer engagement tools, digital financial literacy initiatives. These are all the awareness around the program. Then meeting both needs and aspirations. So as there's an evolution happening both digitally and from the client point of view, there is a need of highly customized products, and that is only possible through a digital intervention. Physical intervention is not easy to do very high personalized customization programs. Then behavioral analytics for interpreting data. Uh, then open banking account. These are very, very, very faster, very transparent, and very inclusive customer protection, and early warning system for resilience. So these are all possible now going forward. Some of the milestones at Annapurna that we know what we are doing. We are recognized by NPCI for our outstanding loan repayment. When we started this journey of digitization in 2022-23 for 65% cashless payment through BBPS. We have also got recognized by CIBIL for the Best Data Quality Award, Best Customer Experience Solution in NBFC, and Best Innovative Product in NBFC, in Bharat NBFC and FinTech Summit. Most innovative product by GRT product program, and the champion of bridging the digital divide. We have got this from Bharat FinTech Summit, and the AAA Treasury Award along with IDFC First Bank from. So these are some of the key areas of our interventions. Now, looking at before digitization, current phase, and the future expansion. As I told you already, a high dependency on group guarantee and group preference, that was the model. And highly socioeconomic disparity in education, mobility, decision making, no digital access, to a document light and medium touch MFI model, where the whole digital penetration is there. Accounts have opened from group to, now we have moved to, individual KYC, individual data, individual account opening, moved from a 10 days to 15 days to now 4 days to 7 days. Medium digital maturity, need multiple phase of household financial health, digital interaction with mostly assisted. So this phase, people are assisting the clients mostly to access this whole digital space, and to a minimum touch high productivity model. So the evolving landscape is technology enabling factor of customer-centric processing. So, initially when we started this journey was morely to give access. Second, it was morely to digitize the internal processes. And the third, it is now totally focusing on the client, the needs of the client, how the digital ecosystem can benefit your client, at the best. All the barriers of information, demographic access. So I think digitization as a tool is a very extremely powerful tool in the hand of a woman in a village. She can open a bank account, she can do transactions, she can access to the market. As she used to have a lot of these barriers, which are now removed because of her access to the digital world, information, so access to information, access to the capital, access to the market, access to the infrastructure, and the processes that are designed originally for her. So that's the new phase where the whole digital ecosystem has to develop responsibly, of course. The alternate data will support innovative solutions to offer. People can design products which are more appropriate for a larger section of the people. It can be, you don't need to fit for all kind of a model. Improve digital access, maturity information access, and need customized offer of household specific needs and aspirations, because people are moving in the aspiration ladder, so there will have different needs in their life cycles, whether it is education, whether it is access to their different requirement in terms of the digitization. And because we as an institutions, the industry has a very close reach to a lot of these people. I think that's where we can reach. With that, I think I'll just let the panel, answer some of the questions that we have. I'll just go there and I'll use this otherwise. So I'll start with Amit, because I think and we will, if you get some time, I know we started late, but if you get some time, I'll also ask you guys to, you can ask questions to the panel. So Amit, I think my questions to you is that at NPCI, can you help us understand the products that you guys are designing, or helping institution design some of these products which can reach out to this last mile and be beneficial to them in large?
No, thanks, Divyajyoti, first of all, and thank you everyone for being part of this. To your question, A is taking digital products to the last mile an imperative? Absolutely yes. I mean, we could scratch this any given way. I mean, there is a data going around that there's 750 million people in the country using WhatsApp. But if you look at the unique number of users for UPI, that still has a lot of catching up to do. So, do we need products that need to go out to these customers? The answer is absolutely yes. How do we go about doing this? So at NPCI, we work very, very closely with the ecosystem, but broadly the 2-3 vectors where we believe these efforts would be helpful. A, making these products available to the customer in vernacular languages. I think that is something that's going to be a big game changer. All of us in urban cities, in metros, very conversant with English. That's not Bharat. That's number one. Second is conversational. I think being able to interact with the screen may come very naturally to most or all of the folks in this room, but that's not the truth for every single person. And when we talk about serving the underserved segments, we have to look at mediums which leverage some of the conversational technologies that are emerging. The third piece is for us to solve for connectivity. I think connectivity is not a uniform experience layer across the country. What may be a very smooth 5G experience for a lot of us sitting in this ballroom may not be the truth for somebody in some remote island in Sundarbans or somebody in some hilly areas in Ladakh. So with these three vectors, and some of the products that we are working on, I want to talk about, I want to probably just name a few of them. UPI 123. One of the things that we are very, very excited about is how do we get a feature phone user to get the experience or to get the capabilities, more importantly, that any of you sitting in this room can have on your smartphone. And not make it, so cumbersome. I mean, I'm going to probably sound like a dinosaur, but I remember the time when, we used to expect folks, at Airtel Money to kind of, use a 16-digit USSD string, put it on the phone, and expect them to be able to do this transaction. I think, we've all learned and come a long way from that. And what we totally understand is how do these, you want to call them skinny apps, you want to call them applets, how do these skinny apps help customers in as simple flows as possible and, minus the, let's say the heavy experience that, or the learning curve that comes with it. So yeah, I just want to keep it a bit short and maybe, keep it for the rest of the panel. But yes, we're definitely very aware of the fact that something more conversational, something which is more vernacular, and something which is more intuitive for these user segments while taking care of the uniform connectivity layer, those are the things that will help us achieve these goals.
So just a add-on question, when are you going to enable a voice-led payment solution?
Not soon enough, is the answer, Divijyoti. But yeah, that's happening soon, as we can tell you. But of course, just want to qualify that with the fact that user protection and fraud prevention. Getting one user on board is a significant effort from a financial inclusion perspective, but when you have scenarios wherein this particular user is defrauded, what ends up happening is you are setting back a whole community, a few months or probably a year in terms of digital adoption. So what's very, very critical is to ensure that they feel safe. Converting trust to habits is possibly, the way we want to see this: develop trust, convert that into habits.
Thank you. Now, Aman, you heard, the challenges and, the possibilities, and, IDFC is a very, very aggressive digital footprint, and you are also not a very high-touch bank. So you would have a model to reach out to a larger section of the people digitally. Can you focus a little bit on that?
Yeah, I hope I'm audible to all of you guys. So, firstly, thank you, Divijit, for asking us here. Certainly, IDFC, our focus is that we need to be a digital-first bank, and I'm sure this is a data which is publicly available, which says 65% of our population resides in rural area. And moment we talk about 65% of the population residing there, you can't have an experience which you want to give it to people who are sitting here, for example, in this ballroom, versus what the experience you want to give it to the rural area guys. So the way honestly we are doing that is that, and let me break this into two parts, which is on the credit side of it, and the other one is on the liability or the pure account services side of it. So on the credit side of it, today, whether it is identification of market in which we really want to operate is the first element which we really focus upon, and there's a lot of data analytics which we do as associated with it, that really which is the target segment which is there for us. It could be a cattle financing example, or it could be a sanitization financing, for example, or it could be a pure dairy market which is available. So we identify what the pocket in which we want to really work for. The second step really comes is that the segment which we want to cater to, is there genuinely a digital journey with a very, you need a high touch in this. You can't go with the only tech world in this. So we, can we have a kind of a high touch, but at the same time a very high tech world associated with it. And to do that, what we really do is that there are 9 steps of process which we really follow from a credit underwriting process. Out of these 9 steps, at least about 2 steps, excluding those 2 steps, which is where we go and physically meet the customer to assess that genuinely whether that person is genuine or not. And the second is finally in terms of when we are dispersing the loan, whether the end use monitoring point of view, we continue to monitor. These are the 2 points where we really do the touch part of it. Rest, all the 7 processes which we are having it, which includes credit bureau investigations, which are required, fraud detections, which are required, e-signing, which is required, all the 7 steps which we do completely digital. And hence, the way on the credit side of it, the way really we work is that our model is at least about 20% you need to be in touch so that you really have ear on the ground of what is really happening on the credit side of it. But the processes are by and large centralized. So that's one version on the credit side of it which we work. On the liability side, which is where pure account services which are required for a lot of these customers. At IDFC today, 100% of our customers are onboarded through eKYC. There is not even a single person who gets onboarded with physical KYC. 100% of those are getting done on eKYC process. All their product offerings which we give it to urban branch, all of those product offerings are available to all of these people as well, which includes a normal housing loan which is required, or obviously the values will be much lesser, or a small personal loan which is required, or a basic bill payment services which are required. All of those services which we give it to urban are available to the rural areas as well. But what we try and differentiate there is that the person who is using that mobile app or experience for us, you will see a lot many options which are coming in for a urban user. You don't need to have that much of a options available, because that will get confused. The generation which is there, they will get confused with it. So it's a very curated version of 3 or 4 key options which are most used for him are the ones which he or she is able to see it, and then that's how they transact it. So the way in which we are honestly doing it is that yes, there is a huge touch model which is there, but at the same time there's a very high-tech model through which these kind of processes we are working with. So far our experience has been honestly is that the youth which is really there in this rural is much more digital native as compared to the older people which are there. And that's how, which we personally see in IDFC, is that the growth which is supposed to come on the rural market is going to become exponential the way from where it is right now. So I think that's the model which we really work.
So, Aman, what challenges right now you are facing in terms of these interventions?
So I think I'll broadly classify challenges into 2 or 3 parts of it. I think the first factor is the trust factor, because this is one such group of people which are there who don't really have that much of trust, who for somebody who's coming from outside to them, they will have a lot more trust with the people with whom they are associated with. So that trust factor is the one which we try and solve it. But that's one of the challenges. And the way we try to solve this is that the teams whom we hire, especially for the identification of customers, are one of those people who stays with them. So that's one model in which the trust factor comes into picture, but that's one key factor which is there. I think the second challenge which we really face is that because this generation of people are not very digital native people, and hence the servicing aspect of it is becoming a really big challenge, because if there is a digital transaction which is happening for whatever reason it has got stuck wherever, in our world, in urban world, we know how to reach out to people, we know how to use a bot, for example, to understand where my transaction is. We know that yes, if there is a settlement period which is there, probably in the next 48 hours, I will get my funds back. But that kind of a patience and that kind of a knowledge is not there. And hence, we have now genuinely started using, while I think it's not a used word, but most abused word, which is in AI, we have genuinely started using AI a lot in these kind of models, where the servicing is being done using an AI in a vernacular language, which is very important, which Amit was also talking about. So I think these are broadly 2 or 3 issues which we continue to face, and that's how we're trying to manage it from IDFC standpoint.
Thank you, Aman. So now to Abhishek. Abhishek, what do you think? Like, because I know you invest in this whole digital transformation in the whole sector. So how do you, as an investor, think? Because as I said, it's a heavy cost. Aman has already told it's a high touch, high tech model, which both has costs. So instead of one cost, the organization is going to take 2 costs. And as an investor, how do you think like that? And what are the any success, you have invested across the globe. So if you think that there's a model which we can bring in here.
Yeah, thank you very much, DJ, for having me here. Thank you, Access team. This was a wonderful presentation, DJ, and thank you for pushing the agenda on digital transformation, digital inclusion journey for everyone, especially for the rural segment, which has been highlighted by Aman and Amit, which needs the inclusion. I think, and before I go to answer my question, which you asked me, DJ, one of the things which I would like to go, I think Aman mentioned that the younger generation in India is easy to target. And that's exactly the reason why we started, because we were seeing as an investor from our lens that rural population, to Amit's point, is getting left behind. And why they are getting left behind? For the two reasons which both my co-panelists have already talked about, the trust and the comfort on the systems. And a number of institutions, while have been looking at the digital journey with the lens of process efficiencies and more volumes and size. But in this process, what has been happening as the new India, new Bharat is evolving, you are seeing a 65% of the population which lives in the rural areas is getting left behind. While we all have worked, and that was a great data indicator, 75% financial inclusion with banking has happened in last 10 years. But what about the digital inclusion, the digital literacy? Over there, we are far, far behind. So one of the approach we had taken is that how we can bring the growth as well as the inclusion for both these, growth for the institution and inclusion for the left behind customers, where we are able to establish the trust. And this trust will only come within a phygital approach where the traditional institution, the institutions which are willing to double down on ensuring that they are not leaving the customer hand behind. They are willing to invest in them, in educating, spending a little bit more time, and then making them walk through with the whole digital journey process. There is no silver bullet for taking somebody on the digital journey and then you start expecting that now my transactions will start to happen automatically from here onwards by that rural digital illiterate customer. The younger generation is very, very different. We as an investor have invested in a number of fintech companies and we continue to see that trend where the fintechs were only interested, to Aman's point, in more and more millennial younger population because that's easy to target. So DJ, coming then to your question which you asked us, what has been our experience? I think, in one of your slides, this was also highlighted. The costs of the digital transformation are prohibitive. But more than the cost, it's also the mindset. I think it's very, very important that we need to look at it from a revolutionary journey. Often in the microfinance world or in the financial world, we, as I mentioned, we look at these from an efficiency gain perspective, which is very, very important. And I'm not denying it. At the end of the day, from an investor perspective, you have to see the return on the assets or on what you're spending on. But you will not be able to see this with a different lens of servicing the product, servicing your customer, unless you look at it from a revolution. How your clients can be met on these newer, customized, highly customized products. In fact, I keep on talking about it. If your songs playlist, which we all create on Amazon or your travel list what you create, if that can be customized at your individual level, why can't the financial services product be customized in a similar way? I just don't get it. And why we have not started putting the efforts, if the technology is available and if the technology can create the playlists for each of our requirement, and that too basis what your mood is in the day, then I'm sure even the financial products can get designed accordingly. It's all about the grit, what we want to do. From our experience perspective, I think what we have seen, if you have a shareholders alignment, if you have the management alignment and the board, certainly the cost of the digital journeys are higher. But DJ, in your slide, you were showing it how the reward or the offtake of these digital interventions can be very, very high. You are able to bring down your inefficiencies, I'm using the word, because I'm more and more an advocate of digital side of it. You are able to bring in your inefficiencies from 7 days to 1 day. And what does this mean? That if you're able to get to that servicing to that customer in 1 day, then the scale of you to reach to the customers is 7 times higher than what you have been doing into the past. India being a 1.4 billion population where we have more than 450 million people is still below poverty line and a huge segment which is in the missing middle. I think technology is the lever as mentioned by Amit, and there is no two way or two doubts about it. Technology is the lever which we need to push, and over there I think we as a capital provider, as an investor, the institutions, whether it is microfinance institution or the ecosystem players as NPCI or as the banking enablers or IDFC, I think we all are responsible players to ensure that our customer is not taken for a ride, whether with the use of advanced technology, their trust continues to be there, and we are able to meet it to them. I know, TJ, I have not touched upon your experience question. You asked us if we have enough global experiences. We continue to see a number of initiatives and experiences over there, and some of those can be taken in incremental steps as well. You, as I mentioned, you need not to take this as a silver bullet to change everything overnight. I think use of AI with the data privacy can be fantastic and fascinating, where you are able to customize individual experiences. To my earlier point, basis your playlist. Similarly, by bringing the process efficiencies and in designing the product itself, basis those process efficiencies, the data which we have collected. There is massive amount of data which has been collected by the institution. How much of that data is getting used? Very negligible. Only 3% of the data collected by the financial institutions is get used today even on the appropriate underwritings and other stuff. So with that, let me take a pause, otherwise I might end up taking more and more time from others.
No, so we have very little time left. So I just want to go ask quick question to all of you. One last question because I intend to ask you that. Aman, for you, Amit, for you first. Tell us what you see. You know, the whole disruption that we are talking about in the microfinance and in the digital. You know, how you are from NPCI are envisaging that. And how this new work that you guys are doing, the whole innovations that you are doing, do you believe that this disruption is coming?
It's a very hazardous question to attempt in a room full of MFI experts. But again, I take the garb of I'm a payments person and not a lending person. But Dibijit, to your point, I think the role that the MFI industry is kind of played is transformative, right? I mean, we heard Abhishek speak about 450 million folks, still under party line. Now, some of the things, let's say, in terms of how the cost of distribution is, right? Cost of collections are. As more and more of those efficiencies come into those cost elements, as they get passed on to more customers, as customers transcend up the volume chain, I think these are the factors that of course, the industry is kind of doing a lot of innovation from within and without. But what are the core competencies? And again, lenders like Aman can possibly talk about it a lot more better. The underwriting is what's absolutely the core skill set to you. Could you kind of look to partner with folks who are kind of taking care of other steps of the value chain which are not as value additive? Say for example, assessing the customer. So a customer visit is important. Collection is critical. But are there other steps in the value chain that you could leverage the standardized infrastructure? I mean, I don't want to take too much time, but the regulator, through initiatives like ULI, with the data or digital exhaust that all of us, and specifically the folks.
Do you think NPCI is also looking at some of these things like?
So again, I'm sure you know about some of these pieces better than we do, but on the APS rates, right, or some of the pieces, on the Bharat Connect. I don't want to plug too much of us into the conversation, but as a digital public infrastructure provider,
Yes.
we stand ready to, plug in wherever those needs arises. And again, we just run the charter of bringing as much percentage of the population into digital payments as we can. So again, stand ready to assist you in any form and shape possible. But yeah, all of us will have to come together, focus on the parts of the value chain that we add the most value to, and find out the best partners to kind of take it.
Okay. Thank you. Aman, now coming to you, like when we know that you guys are doing a lot of, how do you design the product and how do you mitigate the risk?
Yeah, so I think the way honestly we do this that, as I said earlier, that we don't go mass market, right? So let's say, we have started a program in IDFC which is called as a Shwet Dhara, right? It's for dairy financing. Now, it is not that we are going to finance only for those people like a cattle financing and stuff where we are looking at the dairy chain. But what we are doing that is that we are working with one of a partner who is able to provide a digital technology for those dairy farmers such that the animal productivity which they are able to do is increasing. And at the same time, the cost which they today incur in distribution of that milk which is there to multiple locations, we are associated with one of the another partner with whom we are trying to reduce that cost from that particular partner through that particular partner for the dairy chain. Like that, that ecosystem which is there in this Shwedhara program, what we are trying to do is that it is not only the lending which I am doing it. For me, it is equally important that the flow of money which is coming back, do I have as a lender visibility of that? And to have that visibility, I personally cannot do, for example, what a lot of these fintechs or a lot of these startups can do in these kind of specific value additions which are there. And hence, my partnership with all of these people ensures that I get a visibility of how the milk in this particular example is moving from point A to point B, what is the cost which is getting incurred, what is the money which is coming back to those farmers, to what extent the money is getting deposited into my account. That is the value chain or the ecosystem chain, for example, which we take care of, and that's how it's a very good risk mitigant tool for us, right? So like that, each sector, when we look at it, we try and see the ecosystem is being taken care of, and do we have the visibility of the flows, and that's how the risk gets mitigated.
Thank you, thank you. Abhishek, coming to you, you being a funder and investor both, the changing technology is changing very fast, and there's a sunk cost. So how the smaller MFIs will play a role in this, because that's a cost which is very heavy for them. And as an investor and a funder, what role you play there?
Thank you, DJ. That's a great question and fairly loaded, as Amit highlighted, and hazardous also in this room right now. I think the MFI model itself needs to change significantly. These sectoral challenges, what we have continued to see, this smaller MFI segment have not been able to raise the money in last 2, 3, 4 years. And every 2, 3 years, there is a sectoral crisis which has been coming in and has been pushing things by another 2, 3, 4, 5 years behind. So I think it's important that the sector recognizes it, that the raise of capital is challenging. We need to see and do the business differently. Having said that, I think the impact investors like ourselves as Axion, as well as there are many, including some in this room also, continue to be very supportive, because financial inclusion is key and it's very thematic for all of us. But I think as we are seeing it, that unless this cannot be done basis the way it was done in the past. If someone is looking to do this at a very different scale with the use of technology and technological interventions to change certain behaviors, I think there is a lot of appetite and openness. At Axion, I cannot say about others, we in fact not only put our capital, but we also bring in our technical assistance to some of these companies, because the agenda is far more bigger and larger, that how can we reach, as I highlighted, there is a 450 million population which is living below poverty line, and then there is another population segment which is missing middle, and so on and so forth. Now, if you want to operate in this segment where you are economically enabling everyone, then you will have to put in the efforts, and that cannot just come in with the equity. So we at our level, DJ, to your question, keep on looking at it and helping this. But I think what I'm underscoring here is that it is going to be very, very difficult for these smaller institutions. So you need to look at and start more and more collaborating and start more and more figuring it out, so that for the same dollar, same technology, you are able to leverage it far better by bringing things together rather than experimenting on your own or not experimenting at all. And I'm seeing both the worlds operating right now, where some people are feeling that they can continue to live in this bubble for some more time, and that's probably not going to sustain over there. I hope I have been able to answer it.
No, thank you. Thank you very much. I think one quick question to Amit, the gender divide, how, from the tech point of view or a regulator, as a payment regulator, how do you ensure that, we do not have a bias in the tech divide, the gender divide? If you have any thought.
one thought. One is we're not a regulator, we're just an ecosystem enabler is the way we'd like to look at assets. So the gender divide is very real. I think it comes down more from the design upwards approach. So today, have we factored into our design philosophy how many of the user sets or user samples that we poll or we interview, are they having the right representation of the users that we want? I think it essentially starts from there. We want the outcomes, but are we taking care of the input parameters? Are our panels kind of reflecting that? And I'm sure in the microfinance world, that is something that the industry has done a great job of, which a lot of fintechs, which a lot of payment players could learn from. I think this is where payments has probably got a lot more to learn from the microfinance world. And I think this realization is slowly creeping in that this is not a consumer segment that can be ignored. Yeah. So there are certain, to be specific to your question, there are certain measures being taken in terms of the user sets that we are taking care of. Second, I mean, and I'm always baffled when I hear this. It will be very ridiculous if you tell somebody that, hey, give the same product to a person in Romania that you give it to in Portugal, right? But we try to say, hey, the same product should work from the north to south or the east to west of India. So, the one size not fitting all is something that we have to pick forward. And the missing gender, I mean, a few years back, telecom had this problem of predominantly a large number of SIMs were registered in the name of men. We are gradually bridging that. Is this a problem today with digital payment methods like UPI? To an extent, yes. You and I are both probably aware, when we try to pay our helps or folks who, help us out at our places, it ends up going into their male relative. How do we gradually do that education and bring them up the curve? So this is something that, from an NPCI perspective, A, on education programs, B, on designing solutions which are more friendly and keep the user in the mind. Those are some of the initiatives we are trying to do.
Thank you. So I want to you on your products, like how do you ensure that the gender bias is not there, or, how exactly you are approaching the design?
Yeah, so I think, given this specific rural market, as we all know and we saw in your presentation also, women are the one who are the majority of the ones who are having an account, right? So I think one way in which we are trying to really do is that CBDC, which all of us are aware of, we are working very closely with the regulator on the programmable CBDC model, and in which the way in which we are trying to do is that all the DBT transfers which are supposed to come to the women account, women is able to utilize that money for genuinely predefined use cases. For example, let's say a gas payment, right? So in that form and shape, what really happens is that the control still remains with women. And I think the other model which we really work is that from a credit point of view, we genuinely look at a cash flow based lending. And it is not really that because most of these guys will not have a very high credit score in terms of bureau, but we genuinely look at the cash flow based lending, and that is where our AI really help us in terms of identifying that the credit score basis what we are identifying the credit, and the social scores which we are able to get it from the on the ground, ear on the ground, we are able to get the right identification for women.
Thank you very much. Thank you everybody. Thank you for our patience hearing. Thank you very much panelists, and I hand it over to you. Thank you.
Thank you so much, our esteemed panelists, for such a thoughtful and invigorating discussion. My special thanks to Dibyajyoti Patnaik ji for such an effective moderation of the session. May I request the panelists to please come forward for a group picture. And I would also request the ushers to bring the small token of appreciation. Please bring the mementos, and I request you to kindly present them to our esteemed panelists. Thank you so much. Can we have a big round of applause for our speakers? Thank you so much. Once again, thank you so much, all the delegates who have logged in the session. We will also now break. It's a quick 5-minute break because our next session is a plenary, which should have started at 2:50. But then I think after 5 minutes of quick break, I would request all of you to come back to the hall. Thank you so much.